Last week, we had a lot of downward pressure, and it looked like it was a lot of automatic selling from large brokers. So this week, we could probably expect the same. Shanghai's closed, and we got February 27th on the horizon. So it's going to be volatile. Let's take a look at some buying and selling points that might help you out a little bit. Let's take a look.
If 80 or 70 breaks, this happens. Watch this before trading starts. Silver is sitting between two automatic trigger levels. If 80 breaks, large systematic funds likely buy. If 70 breaks, those same systems likely sell. This is not opinion. It is mechanical, and it can activate quickly. Why levels matter right now. After the violent move from the low 60s to above 110 and back into the 70s, most systematic models have reset. Silver is no longer trending strongly. It is compressing. Between roughly 72 and 78, exposure is balanced, but the edges of that range are activation zones. Large commodity trading advisor funds, momentum programs, and volatility-targeting portfolios do not debate headlines. They respond to price thresholds. When those levels break, exposure changes automatically. 80 upside activation. If silver reclaims and holds above 80, breakout systems likely activate. Commodity trading advisor trend models increase long exposure. Short positioning begins covering. Above 80, buying can accelerate. Not because someone likes silver, because models are coded to respond to expansion. If price pushes toward 85 with strength, allocation typically increases further. That is how upside momentum builds. Quiet first, then mechanically. 70 downside activation. If silver loses 70 decisively, stop-loss clusters likely trigger. Volatility-targeting funds reduce exposure. Commodity trading advisor models may flip short bias. Below 70, liquidity can thin quickly. Moves often extend faster when systematic selling cascades. Again, not panic. Code executing. The compression factor. Between 70 and 80, pressure builds. Volatility contracts. Positioning balances. Energy stores. Compression does not last indefinitely. It resolves when a boundary gives way. The question is not whether silver moves. It is which level activates first. What would reduce this setup? If silver drifts sideways and volatility collapses meaningfully, trigger probability decreases. If 80 or 70 is briefly breached and immediately rejected with strong reversal volume, activation may delay. Until then, 80 likely stimulates systematic buying. 70 likely stimulates systematic selling. Between them, silver coils. That is the 2-week map. Silver forecast tracks it daily. Not financial advice. Educational purposes only.